Hello traders, how is it going? It's now February 2nd, a little after midnight, and today's topic is going to be part 2 of an advanced exponential moving average strategy for the 55 EMA while incorporating time frames and RSI. So for the people that have been looking for something much more advanced, right? Because you guys are obviously geniuses and you guys are keeping up to all the material and you are becoming great at trading over time and you guys are learning a lot from this material. Well, we're going to keep adding to that, guys, and there's going to be lots of content to come. I think a lot of you guys have gotten to know me or know me already pretty well, and I'm very consistent with my material and I definitely hold myself accountable. And the most important thing to me, as you guys should know by now, is my focus is on improving your game. I can multitask like a monster, guys, if you guys know that by now. I can reply to tweets, I can trade, I can do TA, and I can record videos at this pretty much all at the same time, right? So so there's going to be a lot of content to come, and I really hope that you guys are keeping up to the content, okay? If you guys enjoy these videos, please go to Steam it. Make sure you guys upvote it because it's the only way that I actually get rewarded in some very small way for all the content that I'm putting out, and it doesn't cost you guys anything whatsoever as well. And please be sure to like and subscribe to these material that you see on YouTube, Steam it, and on Twitter as well. So let's get into this. I know you guys are itching to learn more about this 55 EMA strategy while incorporating different things, right? So if you guys have not reviewed my RSI video, you guys need to go review it because that one is very detailed, okay? And secondly, if you have not even learned about the basic EMA strategy, 55 EMA strategy, I highly recommend that you guys go see it there as well, because if you don't know the basics, how can you learn the more advanced things? Now, I'm going to show you guys how I killed it in the market, okay? I'm just going to use Bitcoin as an example, and we'll also move to other coins as well. Like maybe we'll go to, we'll see what we can do, okay? But we'll talk about Bitcoin specifically for now. So what is the time frame, guys? Time frame is a small and a big picture of everything going on. You have to think of it from the perspective of being able to zoom in to a specific location or time frame to see in that area on a microscopic level if you're using a small time frame, and then if you're using a big time frame, it gives you an overall big picture of everything going on. So until you guys understand time frames, just moving averages in general, the 55 moving average one in general, and RSI, you guys will not get this at all, okay? So you guys really need to keep up with the material. And I'm going to go to my blog right now, and I'm going to show you guys which ones you guys need to study to understand what I'm talking about in this video, because it's gonna be amazing. I think you guys are gonna love it. You guys need to watch lesson 3, moving averages. You need to watch lesson 4, relative strength index RSI with strategy, okay? You need to watch lesson 5, MACD and histogram. You guys need to watch lesson 11, how to interpret time frames, and you also need to watch lesson 12, swing trading advanced 55 EMA, and this will be lesson 16 that I am making for you guys, okay? So first of all, we have to define Constance Brown's RSI rule, okay? Now, I hope that you guys still remember it. If you guys remember it, we're going to write it out right here so you guys actually remember it. Okay, now Constance Brown. You guys are welcome to Google him. RSI rule, bullish is equal to 40 plus, like 40 and up to high number, okay? It's like super high, like high, 70 to 80s plus, like around there, okay? Now neutral is between, say, 30 and 60, or and 35 to 65, around that range. Now bearish is equal to very low number, like very less than. I hope you guys know this annotation as well, okay? Like like less than, like that. Anyways, I'm just gonna go like low numbers, like negative 30ish, like 20, 30, like to about 60 at most, about, okay? These are the most important rules that we need to remember, so write them down. We're not going to talk about very basic stuff for our side, guys. We're going to jump right into it. Now, the way we think about it is like this, okay? If we can ride a small time frame where it is bearishly diverging on, say, a 5-minute time frame, now what we look for is we say to ourselves, can this 5-minute time frame possibly ride it to a bearish trend as well on a 15-minute chart? Now we ask ourselves on the 15-minute chart, can it also ride it to a 30-minute chart to become bearish? And then we keep going up and up and up and up, right? To the 1-hour chart, to a 3-hour chart, to a 6-hour chart, to a 12-hour chart eventually. And if we can confirm it on a higher time frame where a trend does happen to cross over to a very high time frame, then what we can assume is that an overall bigger trend has happened, right? So let's say we are looking at this specific zone, guys. Like I don't really talk about a lot of my positions, but I think that you guys know deep down what kind of player I am, which is a very bear. Like I'm bear at heart. I'm not going to even try to hide it for a moment. I specialize in taking advantage of people's fear and panic in the marketplace because I firmly believe that when others are very fearful, right, you have to make sure that you're greedy, and you can be greedy by shorting. And I love shorting, okay? So first of all, we're going to start off on a 5-minute time frame, okay? We're going to say to ourselves, where's the RSI limit? Where is the RSI restricted? We see that right there, first of all, on the candle, okay? This candle right here is obviously a resistance area. Now we say to ourselves, is the RSI also being limited, right? And we look for, oh no, what just happened? Okay, I thought I deleted something there. Okay, there we go. Just getting closer here. Now we say to ourselves, where is the RSI resistance, okay? Where is it? Now we can clearly see where it is based on this point here. So the moment that this area, right, was formed and we downtrended and then we saw it come back up here, okay? We saw it come back up here, right? A lot of people actually would have entered into a short position right here actually. So a lot of people, trust me guys, went into a lot of short positions right here, and I will explain why. So let's say that we went into a short position here because first of all, there are those risk takers like me. Okay, I'm not going to talk about my position, but I want you guys to know that this is pretty much exactly how I treated Bitcoin, and I've been hoping for a bearish scenario, if you guys remember, for a very long time, right? So we'll just say that I did it. Okay, I didn't enter from right here, it was more so right there, but a lot of people entered right here and they took a swing high right around here. Swing high just basically means like the previous higher point. So they will put a stop loss right up here, right? And this here, arbitrary. We don't know where target is. We're not there yet. We're not there to incorporate a target strategy by using all of these things yet, like time frame, EMA, RSI, candle formations as well, right? And resistances as well on RSI. We haven't gotten there yet. We are only at this particular section for strategy, or sorry, for tutorial 16. So a lot of people will enter a short position right there, for example, and their stop loss would be, say, about $10,400, okay? Now, we get to this point right here, it bounces back up. Obviously, you're not stopped out, right? But what we're noticing right here is actually losing strength right here, okay? Now, I don't know why Bitfinex is super laggy, okay? So bear with it sometimes if it does freeze. Now, we see this bearishly diverging, right? Right here. Obviously, this is a bearish divergence. And then it found support right around the 40 level, right? Which now stays in a more neutral zone, because now we are actually in this zone between 60 and 40. That's our constant Brown's RSI rule of about neutral, right? But what we notice is that, yes, it does downtick, but look at this right here that you guys might not even notice on a 5-minute chart. This is a very bearish divergence because we're getting a lower high, right? So this is a signal that the market is losing strength on a very low time frame. Therefore, people would have entered a short there as well, which is exactly where I entered short, right? The reason why I don't tweet these positions is because I don't want people to copy me that are not familiar with what I'm doing, right? If I tweet my position, guys, and people just try to copy without knowing how to manage their positions or the strategy, it's disastrous. That's why lately I haven't been tweeting my profits or any of my calls. I got too many people following me now. I got a lot of followers, right? It's like 25,000 followers, and I don't know where people are standing in terms of knowledge and skill. So if I'm tweeting my position, the last thing that I want to be is a buy and sell signal on Twitter. I want to make sure that I focus on education and provide top-notch quality technical analysis, not signals. So people have asked me before, why am I not calling out my calls? It's because you guys, a lot of people, not you guys, that was rude. I'm sorry. I didn't mean it like that, okay? I meant a lot of people don't understand how I manage risk and how I react. And I don't just enter a position and wait. I'm sitting there waiting. I'm managing my position constantly by watching it, by seeing if I should add more, by shedding some risk as well, etc. Just seeing how exposed I am to the market. There's a lot of factors to consider. Okay, so now I entered a position there. I will not deny that one bit, and you guys know how bearish I am in general, how much I want a bear market, right? So boom, we enter a target right there, okay, and we say to ourselves, we keep going to the 15-minute chart as well. Okay, now on the 15-minute chart, let's see where it was here. Where is it? Okay, there we go, right here. What we see on the 15-minute chart is no doubt as well that it starts to fan out. So not only are we confirming it, I'm going to delete the rule now, on a 5-minute chart, but because it has fanned out on a 15-minute chart as well, we have also confirmed it on a higher time frame than a 5-minute chart. Now let's see what the 30-minute chart says as well. And make note of this, guys. We always test to make sure there's bearish divergence coming down like this, okay? And then we go to the 30-minute chart and we try to look for that entry. We say, hey, what the heck? It's also happening here on the 30-minute chart, not just the 5 and the 15. So now we're confirming a downtrend on an even higher time frame now. Now we're going to go to the 1-hour chart and we're going to see what it's doing on the 1-hour chart, right? Let's check it out. And we say, oh my goodness, on the 1-hour chart, it's actually been in a downtrend for a very long time already. It has fanned out from way over here, right? That's awesome. So people might have even used the 1-hour time frame to use this 55 EMA strategy from even 11:45. So if the people were looking at the 1-hour time frame to come down here, then they would have had no reason to even close their position up to here, because the time that we close our positions is when this line is below it, right? So now we've confirmed it, guys. We have absolutely confirmed it on a very big time frame. Let's see on the 6-hour chart. On the 6-hour chart, we're just a tiny little blip right there, right? On the 6-hour chart, we're just a blip there. And we've been in a massive downtrend. The people who are playing the 6-hour chart since 1500, they would have entered their short with absolutely no reason to even close their position. And now the people who would be entering on a 12-hour time frame, they would have entered it from about 1400 as well, okay? Now we ask ourselves, is this on a bearish trend right now? And there's no doubt about it. If anybody thinks that this is bullish, you guys have another thing coming, because this is not anywhere close to a bullish market right now at all. This is a very heavy correction for Bitcoin right now. We even confirm it on the daily chart as well for a 55 EMA. Now keep in mind, this is specifically 55, this one's 21, this one's 13, and the other one's 8, okay? These are my EMAs that I use. Where do I get these numbers? They are all Fibonacci numbers in the sequence, all right? Fibonacci numbers in the sequence, and that's how you derive it. So for example, you take 21 as the moving average, and then you add that, right? So if you take 55 minus 21, that's 34. So 21 and 34 will equal the next Fibonacci number sequence. So then the next, that's 55. So then you take 34, and then you take plus 55, that makes 89. So that's the next Fibonacci sequence number as well. So instead of using 100, I might actually be very tempted to use 89 as well for a moving average sometimes, because I'm a Fibonacci trader. Now, when do we close our short positions? That is the big question. You knew exactly how to enter it based on time frames. You saw this RSI diverging as well, right? You saw this RSI diverging over here in the 5-minute time frame that we've talked about as well. Okay, right here you see it bearishly diverging. You know what was another signal to enter? Right here on the histogram, okay? You only see a very, very slight tick. This is not a big crossover. This bearish divergence right here, guys, right there. That would have been a really good sign as well, especially specifically this crossover right here, right there. That's a crazy signal right there where it's crossing over way back to the negative side, okay? See this crossover right there. Make sure you guys review the MACD strategy guide of mine. So now we ask ourselves, on the 5-minute chart, we're going to try to ride it until the yellow line is actually below it. Now we're going to keep going. We're going to keep going with this 55 EMA strategy, and we're going to close it when the yellow line is now below it. And you entered your position from 11 or $10,100 right there, okay? You set your stop loss for a slightly higher than the swing high, around 10.4 right there, and you will close it. And you don't have a target, keep in mind. You're riding this. This is a very reactive trade, okay? Very reactive strategy rather. You guys always hear me talk about being reactive, right? Now, I don't care where targets are, guys. I care about reacting to market conditions and conforming to what is happening at that specific given moment, okay? Now, where would you have closed it after you confirmed everything? You would have closed it right there, okay? Now, if we take a look on here, you guys would have gained yourself a freaking 10% gain on Bitcoin in the past 24 hours, not even. Now, that to me, guys, is a pretty freaking big number, right? That's awesome. So that's how you would have closed it right there. And then guess what, guys? We're still going, right? So let's say now you say on here, oh, all right, guys, all right, I'm going to make note of this area where it crossed over, okay? Right here, and you're going to say, oh wow, it actually crossed over again. Now you're going to see if it's actually still in a big downtrend. No, actually even right here, okay, you're going to say to yourself in this region right there, first of all, should I have closed my position because it crossed over on a 5-minute chart? Now, the way we confirm it is by going to a higher time frame, and we would only want to cross or close our position once it crosses over on a higher time frame as well, to confirm that this short-term uptrend is not only isolated to a very small-term trend, right? Is it also going to impact the bigger ones as well? So here, a lot of people would have made note of it because a crossover could have happened, but instead, on a higher time frame, this actually just looks like a wick. Because two candles that look like that, you guys know what they become, right? From my candlestick pattern. Look, if you have a candle like that, it becomes a shooting star. So now you're using other time frames to confirm that it is rejecting. And what we see is that this right here is the 21 moving average, and boom, this is actually rejecting the 21 moving average on a 30-minute time frame there. So because you're using a 30-minute time frame to confirm that there's an overall very big downtrend still happening, you would not have closed your position on the 5-minute chart, okay? So you would have just held strong there for a short, and you would actually still be in the short right now. And if you guys are in a short position, I'm sorry to say, but there's absolutely no reason for you guys to close your position like me, right? I got no reason to close my short position. I haven't confirmed any uptrend whatsoever right now. No reason to close it at all. Not even on a 5-minute chart. We're not getting an uptrend, guys. Like right now, we are getting crazy low volume and it's dying off. So that is how you use this 55 moving average strategy to make some ridiculous gains, guys, okay? And this is only 10% so far. I'm not bragging or anything. Don't take it the wrong way, okay, guys? But I'm up a ridiculous amount right now on Bitcoin. Yeah, I'm shorting. You guys follow my tweets. You guys know for a fact that I'm a bear. And I can't even say how many times I've emphasized that I am a bear at heart, and it is what I specialize in, because it is the market that I have lost more money than I've ever lost before, like when I was first starting out to trade. So I figured, well, anybody can make money in a bull market. How do I make money in a bear market? And this is the strategy that I came up with, guys, for shorting. And it has worked ridiculously well over the years. Works with any single coin out there, okay? So I hope this has given you a ridiculous amount of insight to this moving average strategy, exponential moving average strategy, using RSI to confirm when the downtrend happens, combined with MACD as well, okay? and I hope that it's going to improve your game down the road. So this concludes tutorial number 16 for part 2 of advanced moving average strategy for 55. If this has helped you in any way, make sure you guys go to Steam it and upvote it. I'd really appreciate that. And make sure you also like, subscribe, and share all the content on YouTube and on Twitter. And if you guys want to let me know I'm doing an awesome job, you're welcome to buy me a beer or lunch or something and donate to the cryptocurrency piggy bank that Luna and I have. But don't ever feel obligated. Other than that, I hope this has helped you improve your game and all of my tutorials as well, that they've improved your game. And I look forward to making another video with you guys down the road. Take it easy now. Bye.